Okay, guys, so in this question, it's asking you to calculate the tax liability. How much tax do you have to pay? To know how much tax you have to pay, you want to know what's your taxable income. All right, so let's start from the beginning. It says that the company has 110,000 of operating income. So EBIT is $110,000. Great. Second part, it has interest income of 25,000 and 70,000 in dividend income, and the company's interest expense was $40,000. Let's just start with the interest expense. So, interest income is, you have to add this back of $25,000. You have to add this back, and interest expense of how much? $40,000. Finally, which is the tricky part, is the dividends. So dividends are $70,000, of which 70% you don't have to pay tax on. So what amount of dividend do you have to pay tax on? So taxable dividends is, let's just put a mark on this. Taxable dividends is just out of the 70,000, the remaining 30%. The remaining 30%. So divided by. Why is that? Because in the question it says 70% corporate dividend income exclusion applies. So 70% of the 770,000 you don't have to pay dividends on. However, the remaining you do, which equals $21,000. That's for dividends. So plus $21,000. So what is your total taxable income? That equals $116,000. All right. Great. So now the rest is relatively easy. You look back at the tax bracket and you apply everything we've done previously. So if you make $116,000, then you're in the tax bracket between 100,000 and 335. So total taxes paid, if you remember from the slides, equals the base plus the tax rate multiplied by excess income. Okay, so how much is the base? $22,250. Plus, what is the tax rate? The tax rate is $39. 39%. And you multiplied by the excess income, and the excess income is, let's just make this cleaner. And the excess is 116,000 minus the base, which is $100,000. Okay, which should equal $28,490. And that's your answer. Okay.